Hello guys. This video is very important about Twitter. As I told you before, I always follow some stocks. The main stocks that I follow are Facebook, Apple, and Twitter. These stocks are very volatile and they always have surprises. Now, I have just made some videos before about Twitter, and it becomes volatile. It means that there are a lot of news that comes to Twitter. I mean, when I say news, it means the company itself. Okay? So, as you can imagine, since you are following me for many months or many years, for those who are for many years, I don't care that much about what are these news and to follow the fundamentals. It means to see everything about this company. I don't do that. Okay? I don't do that. And the way I trade is different from some other people who try just to put too much information in their heads by reading a lot. Now, when you read a lot, you always be confused. Okay? And these ideas that are online will influence you and your trading. Okay? Because if you read something good about Twitter, you think that the Twitter will go up. Now, if you read something bad about Twitter, you think that Twitter will go down and will never go up. Okay? So this is the influence that I am talking always about. That's why, for me, I don't like the noise. The noise, it means whatever things happen when it comes to the news. Now, the only thing I see is the earning date. Now, although this is a fundamental thing, but it has a direct impact on the stock. Now, it is not all the stocks that when we have the earning news or the earning date, we have something in the stock. No. Okay? There are only some stocks that they respond good to the news. If it is good, the stock maybe it will go up and you make a lot of money, or it can go down, a gap down, and you can lose a lot of money. So it is very important to know these kind of stocks if the earning dates have an influence on this kind of stocks. There are some stocks where there is nothing. Earning date, is it good or bad? You go to the stock, you find nothing. Now, why is that? Because earnings dates, there are some stocks that are very, very famous, and traders, they like them too much. Okay? Because they are volatile. Especially day traders. They like when they see a stock go $10 either up or down. It's an opportunity to make money in that day. Okay? That's why some who are very good at news, and they follow the news, and they see the reaction of traders to the news. It's not the news itself that make the change. It is our reaction. Okay? Now, Twitter was responding good to the news. Okay? If we have bad earning dates, you will see a gap down for Twitter. If it is good, you will see a gap up. But recently, like this month, we see something strange happening to Twitter. Okay? It is news, but it is not earning date news. I will make it clear here in order to make the difference. Earning date news, what is it? When the company announces the earning, it means how much this company has made into the quarter compared to the other quarter of last year. Okay. Analysts, they calculate this according to their knowledge about the company, and they give a price. They say, for example, next week, I give you just a clear example. Next week, 27th of October, it is on Thursday. After the market close, the company will tell us what is the earning of this quarter. Okay? Now, do we know how much money Twitter has made? Yes or no? No. No one knows. Now, what the analysts say is that they give approximate thing. They say Twitter will make 9 cents for each share outstanding. What does it mean? It means that each share it has made 9 cents. This is the profit, or what we call earnings is the profit. Now, this is according to the earnings of the company itself. It has nothing to do with dividend of Twitter, because Twitter has no dividend. Okay, it doesn't give money like a dividend as the other companies. It's like Facebook, they don't give dividend. Now, what is this they talk about earnings and there is no dividend? This is how much the company has made during this quarter. So the analysts say it could be 9 cents for each share. It means if you own a share, you'll make a profit of 9 cents during this quarter. This is what Twitter has made. Now, this is just the analysts what they say. Now, if the company itself declares that Twitter has made more than 9 cents, let's say they declare they made 15 cents or 20 cents or 30 cents or $1, we will never know. Because it is a good news, after the market close, the company declares, and just after seconds of declaring, of the people, they understand what is it. Is it good news or bad news? What they do, there are millions of people, they are waiting for this and they buy. At first, okay? This could take a fraction of a second. It's not even a second, it is less than a second. The people, they buy millions of shares. Now, since they buy a lot, Twitter share price will go up so high. It could be 10%, 20%, 30%, 50%, I don't know how much it could be. Okay? This is if the company has made good earnings, better than what the analysts have said. Now, let's say it's the opposite. Twitter has made 5 cents only, or 3 cents, or 2, or doesn't make any profit. What will happen? Millions of shares will be shorted after the market close, and next day you will see Twitter go down like $2, $3, or $5, or wherever. We don't know, because we don't know the players. We know that there are big players, and they take this opportunity to make money. And the first who begin, and he is right, is the first who can make too much money. But you in the morning, let's say this happened after the market closed and you didn't check. Let's say you wait until the next morning, you will see either the price has gone in a gap up or it has gone gap down. This is what happened in a normal earning date day. Now, the thing about Twitter this month is different because we didn't see any earning date. The earning date is 27th of October. It means next week on Thursday. Okay? And we saw that we have one gap up. I was lucky I was there. I sold my shares, and after a few days, like 1 week or two, we have a gap down about other news. Then after 2 days, we have another gap down. Okay? And these days, the stock is stabilized. It means it doesn't go that much up or down. Now, this kind of news, they are not normal, and the stock is not trading normally as normal trade, because Facebook or Twitter or Apple, they trade, and when there is a big thing like earning date, you will see gap up or gap down. But Twitter has a lot of gap up and gap down without the earning dates. Okay? So the important thing to know is that Twitter has a lot of news this month. Okay? Now, if you are going to find what are these news, for me it's an entertainment. You go there online and you just see what are the news, and you know what's going on to this company and what happened. For me, I don't put all this noise into my mind because I am not there. I didn't short the stock and it has a gap down to make money. I'm not there, so why should I worry, or should I think about something that I am not in? If you see, for example, a stock and it has a gap up in the morning, okay? What's the deal? You are not in. If you are in, yes, it's a good thing because you are in and you make money. But if you are not in, it's over. It's just news, stock goes up, you are not in, you are out of the question. It means you are not in the trade itself. Now, Twitter is not trading normally. We have a lot of news, and we will never know what will happen. Next earning date, which is 27th of October, Twitter can have a gap up. Maybe the news, maybe it has made a profit, or it will have a gap down and it will lose more money than it is now. So the only thing I will tell you is that if you are scared to trade certain stocks like Facebook, Twitter and Apple because of the news, because of something, stay away of it. Stay away from it. If you like risk things like Twitter, like Apple or Facebook, you can trade this kind of stocks, but understand that there is more risk to take. If you want just to play like if you want to experiment this, it means just a way of a practice. You don't have to buy too much in order to do this. Okay? So understand that Twitter can go up like $3 or $5 or $7 up, or 10, I don't know. And it can go 2 or 3 or 5 or 6. No one knows how much will be going down or going up. So if you want to experiment that, it means if you want to go into the trade, let's say you think that Twitter will go up, okay, you can buy some shares and just experiment how things work. If you lose some money or you make some money, it will not be that much, okay? It will not be that much, but it is just an experiment to be in the trade. Because understand that when you are out, a stock, when it is a gap up or gap down, you feel nothing. And this is what I am telling you. Trading is practicing, is risking money. If someone tells you that trading is not risky and there is a safer way, he is not or she is not a trader and has never traded in their life. Okay, there is no business without risk. Okay, especially in trading. When you put your money into the market, it's the market which decide. It means the other traders' actions, and the outcome is what you get, either a profit or a loss, and you should accept that. Now, if you don't want to accept, be out of the trade. It means don't trade. Okay, so I hope this video clarifies a lot of things about the earning dates and about other news that are not earning dates, and understand that Twitter is bombarded with the news, sometimes up, sometimes down, sometimes, you know, it's a lot of activity for this stock. Well, if you want to trade, just to try with a few shares. If you want just to look and see what things happen, this is like entertainment. You are just looking at the stocks go up. Some people make money. Now, if the stock go down, you say, oh, it's good that I am not in. A lot of people lost money. But if the stock goes up and some people make money, and you said, oh, I should buy this stock, but you know, you should risk. Okay? There are other people who try another thing, which is options. Because the good thing about the options is that you lose only the money that you buy the contract with. For example, let's say this is just an example. I don't know I don't know how much is the contract for Twitter. I have no idea. Let's say the contract is $100. Okay, just an example. Let's say you buy a call. You think that the stock will go up after the earning date on 27th of October, on Thursday, next Thursday. Okay? If the stock makes a gap up, you can make from this $100, you can make $20 or $30 or $50. Now, if the stock goes down in a gap down, you can lose this $100. You can lose 60 or 70 or 30 or 40. This is for those who just want to try, okay, without putting too much money in the market, because it is limited. Because the option call or put, if you think that the stock will go down, this is called a put option. It means just you lose what you put as money. If you put $100, if you just want to risk this $100, this is for options, either put or call. Now, if you want to experiment shares, you can buy whatever shares you like and check the trade. Now, there is another question is why we should risk and we don't know. Okay, in trading, it's always like this. You have a conviction of a stock and you see that you might make money. You do, and you buy the stock, or you buy option or wherever. This is just a conviction. Okay? Because if you think about sure things, there is no sure thing. And if you continue thinking about a sure thing, you will never succeed in trading, because trading is a risky business. Those who go to trading, they should understand that there is always a risk. And if someone else tells you there is a strategy that you work without risk and you don't lose money, and at least you will be flat, it doesn't work like this. Okay, it doesn't work like this, and you can experiment this in the future and you will see that. Okay, so thank you very much for watching this video. If you have questions, just ask. If you have private question, send me a private question. And thank you very much for watching, and see you next time.